How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 with my Vanguard brokerage account. Now, following a very volatile May, we seem to be off to a much better start here in June, although investors certainly remain concerned over high inflation and the Federal Reserve's response, as well as the pace of economic growth. As for my personal account, it is currently sitting at $88,818.60. Given it's the beginning of a brand new month, I want to get right to it in today's video, talking about 8 dividend investments that are currently undervalued and well worth the investment if, of course, they are suitable for your portfolio. Just before we dive in, go ahead, tap on that thumbs up button, as it greatly helps me out in growing this channel. And of course, if you haven't already subscribed, make your way over to doing so. I'd love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. So as mentioned, we ended the month of May with quite a lot of volatility, and with all major US indexes still down considerably from their all-time highs. The Nasdaq 25.5% below its peak, the S&P and Dow down by 14.25% and 10.7% respectively from their highs. But as a long-term value investor, as I always say, we shouldn't be fretting, because this is just an opportune time for all of us to double down on high-quality dividend investments to fare very well for our long-term financial futures. Now, first on our list today is Dover Corporation, ticker symbol DOV. Dover Corporation is a diversified manufacturer of various innovative equipment and components, consumable supplies, as well as software and other digital solutions. Dover Corporation was founded back in 1955 and has remained a very reputable, trusted company ever since, all while amassing a market capitalization of $19.14 billion. Now, Dover Corporation has experienced a massive pullback in its share price, as it's fallen from its 52-week high of $184 down to around $132. It's a 28% change, but it's important to recognize that that pullback stems from fears of slowed economic growth, inflationary pressures, and labor shortages that ultimately mean in the long term, those long-term valuations create a compelling opportunity for us to invest into Dover Corporation now, especially with their PE ratio sitting at 17.27. For that rebound of theirs at a median stock share price of $175 and a high stock share price of $205, you better believe Dover Corporation is a great opportunity, especially with their dividend yield coming in at 1.49%, to which they have been paying that dividend out for 66 consecutive years, making Dover Corporation a dividend king. Now, next up on our list, I want to talk about A.O. Smith, ticker symbol AOS, which is a stock that as an investor can comfortably hold on to within their portfolio through the thick and thin of economic conditions, given they are a leading provider of water heating and water treatment solutions, which is a necessity for us all, as they have a track record of proven growth and reliability since their founding in 1874 and generating a market capitalization at $9.43 billion. Now, in terms of that share price, it's sitting at $61 per share, which is down from its 52-week high of $85 per share. That's a 28% change, and as for their PE ratio, is sitting at 19.02. Now, analysts only expect that rebound of theirs coming back up to a median stock share price of $72 per share and a high stock share price at $96 per share. And until it reaches those stock share prices, we can collect on that dividend of theirs at 1.83% in the dividend yield. They've been paying it out for 30 consecutive years, increasing it year over year. Now, as for our third dividend stock of the day, I want to take a look into Nucor, ticker symbol NUE, which was founded back in 1940 and has made quite the name for itself as an American producer of steel and related products. Since its founding, Nucor has been able to establish itself as the largest producer of steel within the United States, and has also become the biggest recycler of scrap metals in North America, which should give us all some more confidence in investing into a company like Nucor. Now, their market capitalization is currently hovering around $34.78 billion, and amidst all of this market volatility, Nucor is in fact down by 30% from their 52-week high, falling from $187 a share down to around $130 per share, with a current PE ratio at just 4.67. No pun intended, this is quite the steal, especially with analysts foreseeing a median stock share price coming back up to $145 per share and a high stock share price of $180 per share. Now, with their dividend being paid out in 49 consecutive years, increased year over year, and a current dividend yield at 1.45%, Nucor is surely a dividend stock to watch. Moving right along, we have Pentair, ticker symbol PNR, which is similar to A.O. Smith It is a water treatment company that was founded back in 1966 and has done a great job expanding internationally, yet with 65% of their revenue coming in from the United States. With the same volatility triggers as A.O. Smith, Pentair's stock is currently down from its 52-week high, which was at $80 per share, where it now sits at $49 per share. That's a 38% change in a current PE ratio at 15.18, and analyst expectations of a median stock share price at $61 per share and a high stock share price priced at $100 per share. Pentair will surely be another safe dividend investment bet, allowing you to invest at ease while collecting on their dividend, with their current dividend yield coming in at 1.67%. They've been paying that dividend out for 46 consecutive years, increasing it year over year, so nearly a dividend king. Now, our fifth dividend stock of the day, it is one that you're probably very familiar with, is Target, ticker symbol TGT. Now, if you aren't familiar with Target, it's one of America's largest big box department stores, and since its initial founding in 1902, it has become the 8th largest retailer in the United States with a market capitalization at $72.58 billion. And of course, amidst this high inflationary period, we are seeing such companies like Target take a massive hit, which is reflected in Target's stock share price. We can see it fell from its 52-week high of around $268 per share, where it now sits around $157 per share, a 41% change, with a current PE ratio sitting at just 12.97. A comeback expected as long as there's an economic turnaround, which should very well be the case, and analyst expectations are placing them at a median stock share price of $195 per share and a high stock share price of $260 per share. Now, until it reaches those high stock share prices, we'll just collect on Target's dividend. It's been shelling it out for 50 consecutive years, another dividend king here on our list, with its current dividend yield sitting at 2.15%. Coming up on our sixth dividend stock, we have T. Rowe Price, ticker symbol TROW, which has been spoken about quite often on the Blue Lion Finance channel because it has been unable to escape the market volatility as a global investment management firm offering funds, advisory services, and account management for retirement planning, as well as other financial services. Since its founding in 1937, T. Rowe Price has become an industry leader that has amassed a market capitalization sitting at $28.16 billion. T. Rowe Price has been beaten down for some time as the vast majority of their assets are tied to the stock market, more specifically the NASDAQ, so surely they fell from their 52-week high of $224 all the way down to $124. Their current PE ratio is at 10.02. With an economic recovery underway, analysts are in fact estimating that their median stock share price will jump back to $136.50 a share and a high stock share price at $160 per share. Now, as for their dividend, it has been shelling out that dividend for 34 consecutive years, increasing it year over year. Its current dividend yield is at 3.78%. Our second to last dividend investment is Stanley Black & Decker, ticker symbol SWK. It's a manufacturer of industrial tools, household hardware, and security products. It was founded back in 1843 and has grown into an industry leader with top shelf power tools. In my opinion, it's an investment with Stanley Black & Decker that is allowing one to invest directly into the source versus, say, an investment into Lowe's or Home Depot, both of whom carry Stanley Black & Decker products. At this point in time, their market capitalization is sitting at $17.32 billion, and as they always do, they're going to weather the storm of volatility. Their share price has in fact fallen from $216 per share to $115 per share. It's a 46.8% change with a PE ratio at 13.82. This is quite an opportunity. In terms of analyst expectations, they do certainly foresee a rebound in sight, coming back up to a median stock share price of $156.50 a share and a high stock share price at $204 per share. That dividend of theirs is at 2.64%. It is expected to continue to grow with that dividend track record of theirs at 54 consecutive years worth of dividend increases and payouts along the way. And finally, last but not least, our biggest discounted stock opportunity of the day is coming in from VF Corporation, ticker symbol VFC. VF Corporation is an American global apparel and footwear company that was founded back in 1899 and has managed to build 13 globally recognized brands to its name, from Timberland to the North Face to Vans and Supreme. VF Corporation has done a standout job amassing a market capitalization at $19.35 billion. And amidst all of this volatility, and especially during a high inflationary period, VF Corporation has taken a hit, falling from its 52-week high around $84 per share down to around $30 per share, creating a whopping 64% change. Their PE ratio is at 16.08. This is certainly the time, if any, to invest into such a company. Now, analysts are in fact looking ahead and seeing a rebound in sight, coming to a median stock share price of $51 per share and a high stock share price back at $93 per share. But until it soars, we are taking a look at VF Corporation's dividend coming in at a dividend yield of 3.99%. You need not worry about its reliability. It's nearly a dividend king with 49 consecutive years worth of dividend increases and payouts. Now YouTube, that is it. Those are the 8 dividend stocks worth watching, adding to your watch list, and if it makes sense to do so, certainly going ahead to invest into them. I'd love to collect your thoughts on these 8 dividend investments, if they're in your dividend investment portfolios, or if you're planning on investing into them. Go ahead, drop all those comments below. I'd love to read through them. But just before we get going here, go ahead and tap on that thumbs up button. It helps me out in growing this channel and getting the word out there. Now do us both a favor here in subscribing to the channel. I'd love for each and every one of you to be on this journey with me. And YouTube, until the next video, I will see you all there.